Hello, everyone. Welcome to the Community Foundation's Introduction to Donor Advised Funds. My name is Marcelle Epley, and I'm the President and CEO of the Long Beach Community Foundation. And together with our Vice President, Colleen Bragaloni, we're going to be talking to you today about donor advised funds and really why you might want to be talking to them with your client. For those on this call, most of you might be a professional advisor, whether that's a financial advisor or a CPA, and if you're not any of those, we're just happy you're here. And if you are a professional advisor, you may want to share this presentation with your client. So jumping right in, just before we get started, this is going to be about 30 minutes. It is being recorded. We will pause a couple of times to answer questions. And if for some reason you're not able to get your question answered by us today, please do reach out to us. And during the webinar, use the Q&A feature below. This presentation will be emailed to all attendees, so no need to take screenshots or notes or things like that unless you really want to. We'll be happy to share it with you after. So things that we're going to be talking about today. First of all, who is the Community Foundation? Many people know who we are, but also not many people don't know all of the things that we do. And in order to look at donor advised funds, we should look at charitable giving. And in 2019, that was an interesting year. So we'll talk about that. Why talk donor advised funds with your clients, which is the bulk of this presentation, how they work, the benefits, and dispelling a myth that there are many high net worth individuals that use donor advised funds, but they're not just for the wealthy. And we'll give some examples. And most importantly, how can the Community Foundation be an extension of your services as a professional advisor? So the Community Foundation's mission, if you don't know already, is we initiate positive change for Long Beach through charitable giving, stewardship, and strategic grant making. And charitable giving, what I mean by that is really the Community Foundation acts as an intermediary 501c3 charity to receive donations and redistribute according to your client's wishes. And the stewardship portion of our mission signifies that we are the trusted guardians, if you will, of donor intentions. And we're trusted with many different types of giving vehicles beyond donor advised funds, including estate gifts that clients depend on us to execute. And strategic grant making means that not only do community foundations administer hundreds of charitable funds on behalf of clients, they also distribute grants to nonprofits in communities where they are located. And the Community Foundations does this with our Community Impact Fund here in Long Beach. We've been around for about 25 years and we're one of over 850 in the country. You can think of us as your administrative partners that connects your clients to charitable giving to really ultimately accomplish their goals, which can be large and vast, or sometimes very specific. I want to pause here because there is a misconception that a community foundation like Long Beach, that we are just in one location and your client can only give to Long Beach. Well, a couple of things on that. One is we do have staff here in Long Beach and we're very, very knowledgeable. That's where our expert base is. But we also have 60 staff in Greater Kansas City as our back office. And that really provides you and your client with a wealth of knowledge from other professionals in the industry. And that stamp to the right of your screen, that's very important to us because it's a very hard to achieve accreditation. What that means is we are one of the most accountable and have achieved standards of excellence that puts us in a category that's very, very elevated in terms of policy and procedure and ethical conduct. And before we dive in, I would like to know how familiar you are with donor advised polls or donor advised funds. So I'm going to launch a poll here and ask that you just go in and click on your knowledge. So how familiar are you with donor advised funds? Are you saying DAF? What's a DAF for the acronym? Maybe you can talk some basics, or maybe you're an expert, so you wrote the book on DAF. So let us know, and I'll give a couple more seconds here for the folks on the webinar to respond. Okay, interesting. I will share what we have here, and it looks like about over 50% of you know a little bit about donor advised funds, and another 30% are kind of in this space of why we're offering this webinar is to provide the basics. And it looks like one person is an expert, so wonderful. We hope that you pick up maybe something new, or maybe this is something you'd like to share with your clients. Okay, so we'll move on here to look at charitable giving. In 2019, almost $450 billion were given to charity. And it's interesting to see the breakdown of that in relation to donor advised funds. So the smaller portion was given direct by corporations, about 5%. 10% were given by bequests. That's in planned gifts, in trusts and wills and things like that. 17% were given by foundations, which is up 2.5%. And almost 70% were given direct by individuals. So looking as to why we want to talk DAFs or donor advised funds with your client, it is the fastest growing charitable vehicle around because so many people have realized all of the benefits. You can think of it as basically a charitable checking account that your client uses, and if you're a financial advisor, you're potentially managing that fund, and they can use it on their own time, and we'll go into detail on that. And to put it in perspective, in 2018, about $37 billion went into donor advised funds. And you saw that the statistic of $450 billion were given to charity. So this is a significant number, and it's growing. It constitutes more than 12% of individual giving, and the increase has been significant over the last 5 years, 85%. How much was granted out of donor advised fund? That amount was over $23 billion. I'll just pause here and bring Colleen up to, because I see some questions starting to pop up in the Q&A. Colleen, are you there?
Yes, I am. And we do have some really great questions coming in. I think one of the basic ones we should start with is, do I or my clients have to live or work in Long Beach to create a fund or to work with the Long Beach Community Foundation? It seems like the focus is just Long Beach.
That's a very good question. I'm glad that you asked that question because it is a misconception, and the answer is no. You do not need to live in Long Beach. You don't need to give in Long Beach. You don't need to work in Long Beach. We're set up in Long Beach because we're here to benefit and to foster philanthropy within the city. And I mentioned community foundations exist all over the United States, but there's nothing barring you or your client using your donor advised fund to give to your alma mater in another state. So you can give to other outside of Long Beach, outside of California. You can also live in another state because since our platform is online, you can live anywhere and use your donor advised fund. But the real reason why you would choose the Long Beach Community Foundation is because we are sort of that mid-sized community foundation. It's more of a high-touch white glove service. You really have the benefits of being able to pick up the phone and call people like myself, Colleen, and our staff. And we really do pride ourselves in that. And it's almost like doubling your giving. You're giving through a community foundation. You're giving to a donor advised fund, but you're giving through a community foundation, which is doing other work as well. So I've teased up the next few slides, but I wanted to make sure that made it very clear you can live and work anywhere and still utilize the community foundation in Long Beach.
Great, thanks for answering that. And we have one more question that I think you're going to maybe get into later, but it is being asked up front. So is there a required minimum amount to open a fund or a minimum grant amount that has to be donated out of the fund?
The minimum to open a fund that we have currently is $2,500. And you heard right, 2,500, not 25,000 or 25 million. We keep it low on purpose because we like people to be able to access this. You know, you don't have to be giving out millions of dollars every year. You can give out in different amounts. There's no fund minimum. If you have your favorite charity and you want to give them $25 a month or $25 a year or $500 a year, whatever the amount is, we don't put restrictions on that. There are other places that do have those restrictions, but we know that we work with a vast variety of charitable giving donors in our circles, and some do want that lower threshold. I would kind of asterisk $2,500 because really where that is the minimum to come in, If you're working with, if you're a financial advisor and you're managing the fund for your client, 2,500, as you know, can get impacted by stock market fluctuations. And so we encourage you to use that as the base entry, but then have a plan to add to it over the year. So it does earn some income while it's invested in our pools. Okay, so that was two questions, two great questions. Thank you. I appreciate that. So let's dive in. What is a donor advised fund? Well, I mentioned it's like a charitable giving vehicle. And in a nutshell, they're created to manage donations on behalf of others. So donor advised funds can be used by an organization. It could be used by your entire family, or just you and yourself, or maybe you and your spouse. You can donate a number of things into donor advised funds. The most popular, obviously, is cash. Stock is a wonderful option, and there's other assets as well. That's part of another series on donor advised funds we'll give later in the year. But here's a few examples here. And we have had many donations of other assets other than cash that the Community Foundation can manage for you. We are considered the charitable sponsor, and I'll define that shortly. And I did mention earlier that you and your clients can distribute funds out of the donor advised fund nationwide. So they can go from us to any 501c3 public charity, governmental institution, or educational or religious institution. Another benefit of using the Community Foundation is that we vet the donations before they go out to their final place. And so if for some reason the organization that your client wants to give to isn't a qualified charitable receiver according to the IRS, we'll catch that for you and make sure that it's corrected. This last piece, number 5, investment management, and this is really for the financial advisors out there. This is really for you to understand that when we administer the donor advised fund, your client can either go in our pools and have their funds invested with our portfolios, or you can continue to provide the investment management. It makes no difference to us. For our purposes, we're just doing all of the back-end administrative work, but you can keep your client and manage their portfolio. So I did mention we are a charitable sponsor, so community foundations act as that role, as well as other national charities. And so what community foundations do is they are typically the sponsor. They provide local expertise, which I mentioned earlier. Grants can be made nationwide. And then we also do work in the communities that we serve. And really that's one of the many reasons that donors will choose a community foundation, because they know that there are long-lasting benefits to working with us. And so what's the transaction part of this? So once your client, or you move money over to the community foundation, your client or the donor advisor has privileges to recommend grants. And so the money comes to the Community Foundation. They can go in our online portal and suggest grants out of there, and then we handle all of the rest. It is important to note that all contributions are irrevocable. Just like if you were giving a donation directly to your church or charity, that's irrevocable. It can't go back to you. You receive a tax deduction receipt, you receive all of those things. So it's a one-way transaction. But once it goes to the donor advised fund, then it can go out to any qualified organization I mentioned earlier. And why do donors use donor advised funds? Well, first of all, they most likely have those heartstring tugs for charity. They really want to be involved and be a part of making positive change and giving. And at its basic level, it is a tax benefit that many people do enjoy. And really, another benefit we hear that people enjoy is, I don't know where to give. I'm not sure. I'm going to put it in a donor advised fund where I know it will sit and be safe and be invested, and I can choose where I want to give later. So let's take another poll. In this question that we have asks about, just kind of tests your knowledge about country clubs. So this is a true or false. My client can use their donor advised fund to pay for their annual country club membership. Is it true because your client's golf instructor told him he could, or is it false because the country club is not a nonprofit and your client would be benefiting from the membership? Okay, I think everybody just about got this right. Yep. So the main stop there would be that the country club is not a 501c3. And then someone might say, well, what if they have an associated charity? Well, if it's a 501c3, that's fine. But then the next hurdle is, well, are they receiving a benefit? And in a country club, there's tea times and receptions and concessions and things like that. So the other sort of part two of this true or false question is your client cannot receive a benefit in exchange for what's considered a charitable contribution. So that's that. Great. I'm glad that you all got that right. So here's some of the benefits. When you think about all that goes into administering a donor advised fund, the Community Foundation takes care of everything, and that includes all of the compliance with state and federal regulations. The Community Foundation Donor Advised Fund versus a private foundation, a private family foundation, that's going to be covered in our a future Donor Advised Fund series, but it is extremely cost effective because there's not the annual tax filings that need to be filed and a slew of other costs that come up in relation to that. You do receive the maximum tax benefits for your client when using a donor advised fund. There's a higher adjusted gross income tax deduction. They do receive the fair market value for gifts of real estate and closely held stock. They can avoid the annual excise tax, and they have an option to grant anonymously. And I think the option to grant anonymously is really, really important. And if you're talking to your client, I think this is something truly to mention because it's really two things. One is I can open a donor advised fund and I can call it the Marcel Epley Family Foundation, and it sort of functions the same way, and I'm granting out of it, and it's using my name, and the organization knows it's me. Well, the other option I can have, if I don't want them to know who's giving, is I can name it whatever I want. I can call it I like Charitable Giving Foundation, and it has that anonymous name. The other way it's anonymous is when you use a private family foundation, how much and which organizations you're giving to is disclosed on your annual 990 tax file form. And so the world, including other nonprofits, can see who you're giving to and in what amounts. With the donor advised fund, that's all in the background, and the community foundation holds that information private. And so donors like that because then they don't receive a lot of the solicitations, the mailers, the phone calls, and the direct asks from nonprofits. And of course, the ability to grant later is very highly desired by clients because they can get the tax deduction now up front and then let it sit there for some amount of time and then give when they're ready or when asked or what have you. So one of the rumors that we hear a lot is that, well, donor advised funds, my clients don't have that much disposable income. Well, we manage charitable funds for high net worth individuals, and we do have funds that are, multi-million-dollar funds, but we also have funds that are small and active and being used just for the simplicity of it. And so I mentioned that's why our threshold to open a fund is $2,500. And really, if you have any discretionary income or just a passion for charitable giving, the donor advised fund is a very, very good option. And so really we find folks that are committed to charitable causes use a donor advised fund, and they might just have modest wealth. And then lastly, the donor can, it is part of this, but if you're managing the fund, know that it can be grow with earnings and can be truly used as a tax planning tool. Okay, here's our last poll. So I'll go ahead and launch it and ask you to take a look. So it is asking the question, true or false, my client can donate their super yacht into a donor advised fund. Okay. Oh, they're coming in now. Go ahead and click away if you would, just to test your knowledge. And again, this is a learning. This is a beginners. So and I know that there's a lot of people on the webinar that are a little unsure. So let's see. Okay, it looks like we have everybody voted. I will share the results, and we are split right down the middle. And so half of you think it's true because it's a valuable asset and the Community Foundation would enjoy taking it out for a spin, or false. Everyone knows boats are more of a headache than their words. So the answer is yes. The short answer is your client can, and there's an asterisk there because the Community Foundation does have a process by which they evaluate the item being donated. Our policy is to accept whatever asset that is and sell it as quickly as possible. So don't own it for very long. Sell it for quickly as possible at the highest price. And so with a super yacht, our process would be to first do an evaluation and get our board involved for approval and work as quickly as possible for your client. And generally, when we have gifts like that, we move very quickly and we're able to accommodate. Okay. Well, let's move on with the last part of the presentation today. And for the professional advisors, this is your portion. I think you'll really get the most out of to really understand how we can partner. So we are known as trusted stewards of assets and leaders in the philanthropic field. And I'll go into the resources in our website in a moment, but you can feel free to contact us at any time and ask us questions, get ideas, because as we all know, clients have a variety of needs and goals. And when those come together around charitable giving, we're really the experts, and we want you to call on us and lean on us for that. We are known for our ability to handle charitable transactions that are not run-of-the-mill, that they might be something that you've never seen before. And if it's something that even we haven't seen before, we have a very vast amount of resources, Greater Kansas City, our connections with Council on Foundations, the national affiliate, to really find the best solution for your client. We have a lot of tools, and a lot of them are on our website. Some are things that we can mail to you, but all the while, really achieving your client's goals is what is the most important, and then also achieving maximum tax benefits as well as you're looking at their entire portfolio. And most importantly, your client remains your client. So this relationship could be either the Community Foundation at the table with you or on the Zoom with you, with your client, right there talking about charitable giving vehicles like donor advised funds and what works best for them. Or we can be in the background as sort of silent partners, feeding you information, if you will, and providing you information so that you are knowledgeable upfront and can maintain that one-on-one relationship. We hope you'll join us for our next series on donor advised funds, and that's on September 17th. And we are going to be talking about appreciated assets. I mentioned that earlier, but we're really going to do a deep dive so that we can see some of those complex transactions and how we would handle them for you. And you can register at the web link below. Here's our website I wanted to point out just real quick. If you click on the Give Later button, this is our legacy planning portion of our website. You really see that we have a whole page dedicated for professional advisors. And while you can join our newsletter and things like that, this is something you can go into and click around and find the calculators and find industry articles and resources and case law and things like that really will help you educate yourself on all of the things around charitable giving. Okay, that's the end of the presentation, and we're going to do the last bit of Q&A. Colleen, did we get any more questions?
Yes, we have several additional great questions that have come in. A few of them are basically centering around how they know if working with the Long Beach Community Foundation is kind of a fit for their client. How do they know if opening a donor advised fund is a good solution? And how do we differ from a big brokerage firm like Fidelity?
That's a great question. Well, in its simplest terms, we have a online system that really is almost identical to a Vanguard or Fidelity or a Schwab, because donor advised funds are offered by bank institutions. The real difference, and I think the fit that is being asked here is you've got the platform to give, you've got the functionality, and so that's the same. That's apples to apples. But when you work with a community foundation, we really know the community. We know the nonprofit sector. We know what the most important issues are in a community. And even if you live outside of Long Beach and Long Beach is just not on your radar, we're affiliated with hundreds of other community foundations throughout the United States that we can kind of dive in and look on behalf of your client to see what's the best option. Because there are, Long Beach alone, there's hundreds and hundreds of nonprofits. And sometimes it can become overwhelming to think, well, who should I give to? And so we're able to work with your client really as like a kind of a high touch, full service where we can, with you or directly with them, as I mentioned earlier, kind of narrow down what they want to give to, or if they have a particular cause, like they want to support the arts, or they want to support the environment or education, we can provide resources and advice and information on what who's doing that type of work, and maybe where they can focus their charitable dollars. And this is something that I say a lot, and I think it just communicates the basics is we answer our phone, and I know that that's hard to come by these days. So we're more of a boutique experience, I would say, versus the large banking institutions. However, make no mistake about it, we do have the large, vast backhouse resources of this powerhouse called Greater Horizons, and for that reason, we are both small and nimble, but large and very powerful in that respect. So that's what I'm telling you is what I hear from the financial advisors that we work with and our clients, and that's something that they truly enjoy.
Excellent. The next few questions kind of center around investment flexibility. As an advisor, can they actively manage the fund?
The answer is yes, you can actively manage the fund. When we set up donor advised funds, we give the client an option either to go in our pools. It's about a $3 billion portfolio of all charitable funds, or they can go stay within your portfolio, and you can continue to manage that fund. And it's just a click of a button. And the process by way it works, I'll go into that briefly, is that you sign up the community foundation as a client, and then we have a shared account that we are able to have those transactions go back and forth, and donations are reconciled. And it's a very simple, easy process by way we share that account and share information.
Great. You said a little bit earlier in the presentation that the fund holders can let the funds sit in the account for some time. How long can the funds sit?
Well, that's a very interesting question, and the answer on that is moving a little bit. Right now, there is no legislation that says that if you have a donor advised fund that you have to spend it in any certain amount of time or in a certain amount of increments. As many of us know, with a family foundation, every year you are required to spend at least 5%. Well, donor advised funds don't have any of those restrictions currently, but there are there is a growing movement and action and activity around having donor advised funds have some kind of requirement to spend. And so in anticipation of that, what we do at the Community Foundation is we monitor our funds. And if your client has not spent in the year's time, we'll just check in with them and see if they have some different goals in mind. Maybe they're saving to give a large donation to an organization. And really, there's a variety of reasons. But I can count on one hand the number of funds that we have that aren't active constantly. And generally that's because they are saving for some type of a gift, or in some cases they've forgotten they have one and they say, oh, I meant to make a donation and here, go ahead and do that for us. So it is, and if any laws pass and require distributions from a donor advised fund, that'll be something we'll administer at the time.
Excellent. It appears that somebody has a client that has a life insurance policy and they're wondering if they can collapse that into a donor advised fund.
Can you collapse a life insurance policy or liquidate rather into a donor advised fund? Yes, you can. That is a process that the Community Foundation would handle on your client's behalf, and those can be pretty lucrative. And then they have from there, they have a cash balance, if you will, in their fund that they can use to give to charity.
Okay, this question is along the same lines. We talked about boats. What about cars? A lot of charities out there now take cars. Would the Community Foundation accept a car?
If the car was sort of passed our test for acceptance, so we have sort of a 4-point system that we use where we look to see what's the value of the vehicle, how quickly can we sell it, and you know, what's the marketability of it. Really, it comes down, so any asset, whether it's a car, whether it's a boat, whether it's a piece of property, a home, an apartment complex, you know, we've even had wine collections given to us. I mean, there's a variety of things that you can give, but ultimately, if we can find a buyer for it, that's the marketability factor. And there's a lot of other gifts that, like I said, in the next donor advised fund series, that will really, I encourage you to sign up for that one, because that's when we're going to go into detail about those type of gifts.
Great. It looks like we're almost at the 30-minute mark, so I think this is an excellent question to end on. It came in here at the end. What are the fees?
Oh, fees. Well, that's a great question. Our fees are kept low on purpose. We are a nonprofit ourselves, and so it's a variety of fees, whether it's a donor advised fund, an estate gift, a scholarship gift, but you can say safely it's around 1%, and it really depends on what your assets are. So if you're opening a fund for 2,500, the actual fee for a donor advised fund is 1.25% for administration. And then we charge 15 basis points or 0.15% for investment management. Now, if your client has, you know, more than that minimum and they're approaching, you know, the $1 million mark, that fee starts to come down. But I will say, for the professional advisors on this call and the financial advisors, if you are continuing to manage your clients, the investment portion of the donor advised fund, which I mentioned you can, we have a special rate fee just for you. And so that mirrors more of the larger financial institutions. And that's something that we can do. And we want to be flexible. We want to work with you. We want to know what your client's goals are. They might be coming in at a smaller balance, and maybe it's going to be larger later. Maybe they're going to put some estate gifts in there, and such. So really, I say 1% on average. And so I mentioned we want to work with you. So give us a call. Let us know what you have in mind, and we can go from there.
Great. That's all the questions we have for now.
Okay. Well, thank you, everybody, for participating today. Please take the survey that we send you. It's a short survey. I promise it won't take long. We really could use your feedback. This is the first series on donor advised funds that we've done, and we do want to make it better for you and your peers as you log in. Connect with me on LinkedIn. My phone number and email address is up there, and we look forward to hearing from you. Have a great day, everybody.